Hello everyone, welcome to another weekly market review. It is the 19th of July 2021. Stocks are getting a bit of a sell-off and cryptocurrencies for me have gotten to a very interesting place. Another solid piece of information. Let's have a look at what we have. So here we have total market cap on the weekly time frame. We were looking for this once we got the weekly close on the 21st of June, but we have gotten a stronger weekly close below this. You can see 21st of June we got a weekly close slightly below the weekly support level, and what did we get? The next retrace became a good short opportunity, and now we end up closing towards new lows. On the weekly level, in terms of looking for information, the next couple of important levels are both significantly lower than where we are right now. If we pull out some fibs, because now it's time to look at where the potential lows can be, guys. So if we pull out the fibs, and let's also slap on an anchored VWAP right here. Take one from the December 18 lows as well. So anchored VWAP and fibs and weekly levels suggest that the actual level for support is still another 16% lower. So that would mean if Bitcoin is close to 31k, that's close to 25,000 on BTC, if that is the actual support level that we have to get to. So in terms of weekly time frames, it's nothing but thin air for now. After this weekly close, what we have for a bullish case is either price starts to find support back above the weekly level, or we end up finding a base and starting to look for the next level of support, since a major level of support has been lost for the market. Let's look at the 3-day. So 3-day, we had a much clearer picture, much earlier when we start to lose the 3-day level right here. I'm just gonna make this tighter. That's what I had done. Once we start to lose the 3-day level, end of June, we got a retest, a failed retest. And what is it that I spoke about? Even if we are to build a base, here is the first level that we have to, revisit. But if you actually look at it, guys, in terms of fibs and in terms of higher time frame levels, this daily level is in the middle of nowhere. We don't have much price action in history here. The only last time price has moved through this level, it has moved very quickly. So it is uncharacteristic of price, to not spend more time in a range where it has already breezed past. So logically it would make sense for, if price is bearish, to move back down, or if price is bullish, to not come back down here too far and reclaim the weekly level. So in terms of a clear trade, what I would say is it's still that 15% to 18% lower. But the thing is, guys, that what I was talking about in the Discord before, sentiment is key when we are looking at how to read bottoms and what happens during market bottoms. And I would say that over the last week, this move down that we have gotten, it has made the market very bearish. I think the market was okay in the starting of July, still looking for that V bottom, all the thing that the market had been doing since early May. So somebody mentioned it's taken about 60 days after this move for the market to get bearish, right? It's a 50% drop and 60 days of what we can call as a kind of a slow bleed. So there's one range and price is broken down, and now we're in a second range, but we can call it kind of a slow bleed after a 50% retrace. And basically we got also what we got is a shallow retrace after this 50% retrace. So there was so much information in the market right up here when we were getting bearish and looking for places to short, that there was so much information that was showing that there is potential to go lower. And now what I would say is, if the market is getting bearish here, I mean, we are in consensus bear territory. Okay, what I would say is the money that I track, which has constantly and consistently been bullish, is also bearish on this small little drop. So what I would call is for price to be in a consensus bear sentiment, over the last 2 to 3 days, or over the last essentially almost the last week. After we got this breakdown, market is starting to get bearish. What information do we have, in terms of, fine, there is no exact fib level here. That's why I would really like for price to at least come down to the 618 in confluence with the weekly level. This would be great. If price can do this, this is great confluence. We have confluence with the anchored VWAP from the March 2020 lows as well. So this would be really good confluence right here. But in case, what other information do we have in terms of support when we look at this chart? So we have support over here, from the big crash, 23rd May, we found support again. So this is kind of like a support zone currently for the market. First bounce was bigger, second bounce was smaller. All of this information we have spoken about before. So we're coming back down, and there is decent potential to test this. But for now, what has happened, while on the way down here, we have consensus bear sentiment. So what I would say is that's very significant information, guys. Just the consensus that we have now that the market is dropping. And for me, that says that there's potential that now we don't have too much more downside, and the potential of a short squeeze starts to rise. When and how that happens, we have to see. There is the Bitcoin chart that is showing some more information, and that paints a better picture for us. But just in terms of support, solid support down here, close to 1 trillion in the total market cap, between 1 and 1.1 trillion. It's just solid support for me, for the market. Okay, here you look at this daily level right here. So this 1.1 trillion along with the anchored VWAP, the 6.8 weekly level, this is a really good zone. So if price is to come down here, I'm very interested in certain names. If you're interested in those names, you come and spend some time and attention in the Discord. I am dropping some of them, though honestly, people are asking, and we need this to, I need my trades to stay scarce, guys. I'm just not built out of that. These are not very high volume coins, so I don't want everybody to get burnt where there's 600-700 people, 800 people in the Discord who are looking at small caps and mid caps at around the same time. So I can't do that. I don't want to burn everyone, and I also don't want to ruin my own trades. So essentially, when we do start playing a lot of alts, it will be closer to when we have V2. That announcement will also be coming very soon. We're already making some changes to the Discord and everything. But anyway, an actual area of interest, it is still slightly lower. Still another about 7 to 8% lower. But because of the sentiment, I would say there's still potential, for price to just not come down. We are starting to stall already at this level. So we have to see if this comes, again, very interested. Look for the names that have outperformed the market, very interested over there. And if it is not to come, we could potentially get a bit of a short squeeze first, you know, and then either test the market or reclaim the weekly level. So that's the plan for the total market cap. Potential for a short squeeze, um, on your toes. Look for names which might end up showing early signs of this short squeeze potential. And if we do get that squeeze, start to hold weekly open, this weekly level again, we can start looking for a potential test of maybe the monthly open. This is last week's open, so I would have to shift this here to this week's open. Here's the weekly open. So that's the plan for the market. And if we do end up coming down, then all the dry powder is ready for really good risk adjusted opportunity if we get it. Altcoin market cap on the weekly time frame, we have a more solid level on the altcoin market cap, and you can see we've had the lowest weekly close just like the total market cap, and we've already had a 618 retrace on the altcoin market cap. So in terms of this chart, levels are slightly cleaner and making more sense right now. But still, the 618 along with the VWAP from the September lows, it is slightly lower, that 5 to 8% that we're talking about. It is there, so that's definitely an area of interest. And if you look at it on the daily time frame, very similar charts. Right now correlation is positive, not in all sectors. I mentioned it before, NFTs have been doing their own thing, but outside of that, correlation is quite positive. So higher beta as of now, but I would just say, guys, we will take a quick look at the ratios, the alt BTC ratios, and just see how cyclical they are and what is going on. Because I mentioned, July is not that great a time for July, August, and September is not that great a time for alt BTC. So I still think there is where the real scarcity lies, is a potential of actually catching the real bottom in BTC. And if BTC gets a move over, if BTC does end up getting a spike, it could be a lot of alts don't get the same thing. But what is interesting is, because we have revenue generating alts, the market is it is shifting its dynamic. This was never there in the 2017 bear market. We had very, very few coins with an actual use case and revenue generation, but 4 years of development has changed the scenario. So that is something that we need to take into consideration and something to continue to monitor, because numbers are numbers, guys. In the end, even if the broad market gets a bear market, those coins that truly do have a functional product and revenue, they will have the interest of even bigger money. That would mean they could end up finding support higher, they could start getting accumulation spikes, and there are already coins that are doing it. So what I would suggest for you, this is a great time to be doing your research. Put in the time, and for the first bear market in cryptocurrencies where fundamentals matter, you should be putting in your time and looking for strong fundamentals, so you can base off of this market at least a few names where you have potential of finding support earlier, finding leaders, finding outperformers. So spend your time doing that. Outside of that, spend your time learning. That is something that will really help as well. For alts against BTC, we are back to our trusted DeFi index. We got that big sharp spike, and what I was telling you is that we are back in no man's land, but now we are back at support. Okay, guys, so this is really critical. What happens with altcoins right here, and just DeFi, NFTs are still looking different from the rest of the market, but DeFi is still representing a consensus of the altcoin market. So in terms of retrace, we're very close to the 786. So key support level along with the 786. If this is to continue the range, we lose this, and the potential of moving back down to this next range down here, it starts to increase significantly. So key support for all BTC, if this along with BTC USD gives us some kind of an area. What I would say is, guys, like I said it before, July, August, September is not the best time for altcoins, so I would say it again, that this long drawn out range, it could easily take another quarter on Bitcoin to build that base. And we built that perspective when we were looking at the quarterly charts, because a base needs to be built for the next move. It's simple as that, and price is doing that in the middle of nowhere. So if we build that base and BTC moves out, there is really good potential that it does so on its own. Could be a few names, like I said, the real revenue generators that latch on to Bitcoin, but it could really suck the value out of BTC, and this pair could really suffer if that happens. Just look at its rejections though, guys. Fat rejection. Getting another one, so this is key support now. Let's see if the 786 can hold or it's lost. If we lose the 786 along with this support level, I would say that it's basically still BTC time. In terms of support levels, I think it is significant that we draw out this support right here, because the market has found support here a couple of times before, and this could essentially be the maximum volume from this previous range. I haven't drawn it out yet, but very potentially possible that this is the point of control of this previous range up here. So what price a lot of times does for all BTC, it builds a longer complacency shoulder, so people can get trapped. And this, just look at previous market cycles. This just happens. This has happened in previous cycles, so we can still think that there is potential to find support here again, a bit of a bounce, and then eventually when BTC moves out of the range, this just breaks down. That is very possible in this ratio. So just keep a lookout on this. Currently in an area of interest where we could get a bounce. So BTC now on the weekly time frame, and clean break below the weekly level, so by no measure. And just look at it, guys. Look at how, when you look at high time frame, when you look at the high time frame, how you can get hints as to where the market is going. So many reply guys on my Twitter, up here talking about, I was just taking a dig at the Wyckoff fellows, just because they don't understand the concept of consensus in a market. They don't understand the concept of sentiment in a market. Just taking a dig at them. So many of them are telling me that, you don't know, you can't study. But basically what we are studying in these reviews, just look at the methodology and try to understand it. We got so many hints from these total market cap, so many of them showing us the direction of the market. And what did I say in the previous review? We made a close below what was previously support. And what did that give us? It gave us a very clear bias. We got that bias and we've made another close right here. But now we have two pieces of information. Just in terms of pure price, there's nothing you can say. Look at it. There's wicks everywhere, and now price has gone right through. I spoke about the exhaustion of buying, and just by reading price, I showed it to you, just by reading price here, support, price started to close below is exhaustion. Okay, we got a rejection again from expected resistance. Wherever there's wicks, price started closing below. That's exhaustion. Now look at it here. There's wicks here. Price is starting to close below. But we have a new piece of information now. As of now, you can see on the daily, this weekly level is turning into resistance, for now, which is significant. We're very significantly below the weekly pivot as well. But I'll give you a new piece of information on the weekly time frame. So we have a breakdown, okay, but look at the volume, guys. And I mean, I've seen multi-exchange volume, so this is legit. Right now I'm only showing you BitMEX, but anyway, just look at the volume. So we have breakdown, but it's on very low volume. So when this happens, this, you cannot rely on this move. What we have is a breakdown on very low volume and negative sentiment. Okay, so this is how you play that. You will see that I am on my toes. I'm not getting overexcited or aggressively shorting. I have been shorting this market enough, all the way from up here to know, when it is to start shifting bias. You saw a bunch of bullish messages in the Discord, and I'm doing that on purpose. It's not to make everybody bullish, but it is to start shifting your bias. I told you I've shifted my bias to neutral. This is why. Okay, price is showing something, and we can be talking about price action, but volume and sentiment both are showing something else. All right, so this looks more just like something that is driving that is driving the market in the opposite direction. This is not a strong breakdown, guys. This is not reflecting all the new charts that you're going to start seeing, which tell you that price is coming to 20k and this, that. Maybe it could, but we have significant information to deal with before price can do that. So, in terms of levels, I spoke about it very clearly before, guys. Just look at this. Wix. This clean out is only on BitMEX, where we got 28k. On the rest of the exchanges, I think yearly open held. So just look at how much liquidity there is. I don't know how the market can move without taking it. This would be sacrilege for me that the market does that. Will we go straight away? We cannot say. Yes, the market looks terrible, but there is still potential, I would say, for a bit of a short squeeze, and we get that. If we don't, what are the signs that we might not? Here, this is the cleanest sign I have for you guys. Okay, this weekly level is significant, in which for the first time you can see, we're on a daily chart. For the first time, we have started to get rejected from it. So that's clear weakness, but you understand that all of this is on low volume. This is not breakdown volume. We have a bearish weekly chart, but the volume is suggesting that this has the potential to be a false breakdown. Okay, so this is not breakdown volume. It probably could just be hunting somebody who has too big a position up here. They've just been walking price down. That's what I've been talking about since the end of June. They've just been walking price down. Look at it. This is very controlled move of price. It's not violent at all. It is just slowly, removing bids, putting asks, pressurizing the market to get where it needs to, giving it a helping hand when it does. But again, it's just on low volume. So there's a consensus for the market to want to do that. So that can lead to two things. I mean, there is still potential that you get an actual real breakdown if price goes below the yearly open and really, start getting an acceleration. But as of now, sentiment and volume is not supporting that we just smash right through these levels. What it is supporting is that, not just this, we have confluence also, that, there's certain assets like the NFTs that have become the leaders for, what potentially could be a reversal, because they've already done what they had to. If you look at an NFT sector chart, does not look like this. It looks like we've made an impulse and we're getting another retrace, which could potentially give continuation, in that sector, which is again so interesting. We've not had that before in crypto, where just sectors are starting to, break free from the binds of Bitcoin. Again, market is going to be very creative, guys. We can't just look at all the information that we have over the last decade and start to extrapolate that, because this is just such a dynamic market and it's growing so quickly, and there's so many smart players in this market that you have to stay on your toes. You have to think critically. You have to remain fluid, and this is what our fluidity is telling us, that we have to start shifting our bias to neutral. Yes, there can be this move down. If it's coming, fair enough. You have plays from here, up here, and up here or even up here. Keep some of that and allow this to play out, but don't get aggressive over here. Start looking for downside and whatnot, because I think all dumb money is doing that right now. So just be on your toes about that. In terms of levels, this is just such a great level, but I don't know if we're gonna get it, guys. Like, just the GP along with this 3D level, it is just such a fantastic level. Will we get it? I don't know, I can't say. That would basically lead us to the golden pocket of the entire move and the total market cap and the altcoin market cap. That's another 20% from here. But once I have played a decent chunk of the move, like a 40% move, another 30% move up here, another 20%, we start to get neutral. We play this down, but we start to get neutral and really start to look at where potentially we could get that reversal. Your mindset needs to change, because if this is just a standard retrace from a strong move and we're to get another leg, you better have a neutral mindset where there is potential to be buying for the next bit of big gains. If you're just going to be like, oh, we made a lot of money being bearish, so let's stay bear, and you're going to actually not have the correct mindset to buy the dip, because you'll still be focused on making money to the downside. So it's just the mindset right now, guys. Shift your mindset so that you are aware, so you are present when the opportunity arrives. Just be ready to strike when it does arrive, because there is potential. There are some signs which show it, that some things are changing in the market. So stay sharp, stay savvy. I quickly forgot to add, the near-term bull picture. You need this weekly level to start flipping back into support, and we can get some support over the weekly pivot. We could possibly trade it back to last week's open. This is weekly open, this is last week's open, so we could trade it back up to there. But there is potential. I really like this yearly open level, and I really like for price to take all this liquidity. If it happens straight away, well and good. If it doesn't, and you start flipping this, you can start looking for at least one more move up, and then reanalyze what happens up here, because a flip of this into support again, and we can look at the next level. But we could just get a bit of a short squeeze and come back down and take this over the next couple of weeks. This would just be a great opportunity, guys. So that's the potential scenario. Either we continue to get price walking down, but volume is so low that something has to happen here. If we don't get that, get a bit of a short squeeze, get another move. Does it come all the way down? We can't say. Or does this just become just an epic place of liquidity where just somebody has eaten everything there is to buy, and they're still waiting with so much more that price doesn't have the strength to go any lower. That is also a potential possibility. So in terms of short term, this is the weekly level, guys, to reclaim for at least a bit more of a squeeze. And if we are to take these lows again, get back above weekly open, during the course of the week, there is good potential for us to really get out of here. For traditional markets, we're just looking at the weakness in breadth in the broad market. What we have is the Russell, the small caps. We have the transportation. So the transportation, guys, just historically it's been used against the Dow, just to get this divergence in the internal strength of the market. And when this is, this common knowledge, so it's not absolutely set in stone and fantastic, but when there is this divergence between the transportation average and the Dow, you do eventually end up getting weakness. You can see this divergence started to begin essentially from mid-June, when the transportation average, after the early June sell-off, the transportation average started to breakdown, and the Dow still continued to make new highs. So this is essentially where it started to manifest, and it's the same for the Russell. Essentially, right here you can look around the 25th of June, started to have an extreme sell-off in both the transports and the small caps, and you can see that Nas continued to move up, and so did the Dow. In fact, if you look at when we started to get a strong sell-off in the transportation, just look at the rotation in the sectors, how strong the move up in the Nasdaq was. So just got an alert for BTC possibly going for those lows again. So let's see how that manifests. But anyway, Nasdaq started to move up, right when the transport started to sell off. It's a very clear sign of sector rotation. But in terms of that, this is what I started to speak about in 2021, guys. Market gets very selective. It's not that big impulsive move since the beginning of 2020, which is you could bet on anything and everything was just moving. Now you have to understand sector rotation. Now you have to understand how this is moving, and also just think about the broad market risks. When everything stops moving together, when market is starting to get sell-offs, you end up having more choppy periods, and you end up having a greater risk in terms of what is happening with price. So the dollar is also moving up. We'll quickly look at the dollar shortly, but this is just defining a period where it just makes more sense to be more prudent. None of the smart money would really be looking to aggressively long the market right now. So essentially this is just more a period of getting price to find strength and find support, and also being very selective in your picks for potential upside. Looking at the dollar on the weekly time frame, so very cleanly held the bottom of this channel, and very interestingly, it has negated the strong downtrend potential that it had, because this is what we were looking at. We were looking at the relative strength on the dollar, and looking at the timings for its breakdowns, 189 days, 119 days. But dollar has built out a different kind of structure, and essentially this is another thing, guys. There's just so much consensus on this narrative of inflation that the market has played against that, and what we were looking at is first potentially the first area of trouble, the resistance level. We got a bit of a reaction from there, but the market has moved up. But now if you look at this VWAP, this anchored VWAP from the impulse we got down in May, that has given us a couple of very good reactions, and we are getting close to that. So let's see if this anchored VWAP is the next level of resistance. If not, then we have this quarterly level, and I think this is a very proven and a strong level of resistance. So if the dollar is to come up here, I would really like to play the dollar to the downside from here. But until then, we have to see if this anchored VWAP is going to be playing out, or we actually play out the structure, just in terms of timing and how long we have spent here. We're breaking out of a 230-day range, guys. So very clearly the dollar is nowhere near as much trouble as it was when we were making that big downtrend in 2002. So different perspective. Even after all the printing, it seems like there is still enough demand for the dollar, and the American economy still has the liberty to print more. If the dollar is doing this will give them encouragement to put in more in the stimulus, and get some more bang for their buck. So I would, like, if I were them, I would announce possibly something manifesting close to this quarterly level. It's a nice area of resistance, and we could either range here or build out something like this, because nothing moves down in a straight line, guys. Look at this. 2004 to 2008. We got another strong downtrend, but also we had essentially more than a year of a counter wave as well, 490 days. Even if you look at this from 2003, we had about close to 200 days before price started breaking down. 260, 270 days. So all these moves are on very high time frame, guys. Even if this is an impulsive move, just look at its retrace. Just even a 23% retrace of this entire move that we've gotten, it only gets us close to this anchored VWAP and the quarterly level. So still could very well be that this is the first impulse of a move down. When we get confirmation of that is only once these lows that have been defended for a period of 5 to 6 months, they get taken. The bottom of this channel gets taken. This yearly level gets taken. Until then, we can just look for levels where we can get a good reaction. There was potential for this level to give that reaction. We did not get it, but still it was a decent place. If you were looking for downside, it was a decent place to be managing risk for potential downside. The next levels are close to this anchored VWAP along with this 23% and then this quarterly level. So looking for the next two potential reaction levels for the dollar. Commodities are getting a sell-off, because of the dollar and the move on the dollar currently. So we have gotten to an area of interest on palladium. So just wanted to cover it very quickly and show you that we're in a nice zone of confluence. So let's see if the risk that we can manage here ends up, if this level ends up holding, and we can play the continuation from here.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!